the subject of fundamental of investment. In my previous lectures, I was talking about valuation of securities. There are broadly two approaches of valuation of security. One is called fundamental analysis and the other is called technical analysis. In the immediate preceding lectures, previous lectures, we talked about fundamental analysis and we started with technical analysis. And in the technical analysis, the various indicators, charts, graphs are there, on the basis of which the technical analyst analyze the stock market behavior. That is, that whether the share price will go up, whether the share price will come down, and is it the right time to buy or is it the right time to sell. So this is basically technical analysis. So technical analysis believes that the past behavior, the past stock prices and the volume is the indicator of the future price behavior of the stock and the index. That is, history repeats itself. Technical analysis assume that history repeats itself. On the basis of historical facts, they predict about the future. So some of the indicators we discussed in the previous class and some of the indicators and charts we'll discuss in today's lecture. Let me come to them. One of the indicator is called relative strength. What do you mean by relative strength? It compares the stock performance over a recent period to the market performance or other stocks in the same industry. What it means is that if we are talking of X stock, to what extent the X stock is increasing or decreasing, right? If I talk of the strength, let me talk of the increase first. That whether say for example, stock X is increasing by 10%, right? In a last 1 week period, it has increased by 10%, or in last 1 month, it has increased by 10%. And relative to that, the stock index, the stock market has increased only say 5-6%. Or the stock in the same industries, the different stocks in the same industry have increased by 5-6%. It means it is a relatively strengthful share. There is a relative strength in this particular share X, because the share price increase in the stock X is greater than the stock prices increases of the other stocks of the industry or of the whole of the index. So it's indicate that this stock is in the bullish phase and there is a likelihood that in future the stock will increase further. So this is called relative strength. Means this can be also calculated through a ratio. This ratio of the stock price divided by the market index. Means that what is the increase in the stock divided by what is the increase in the market index. That if the ratio is more than 1, it shows the bullishness in the stock. So if the ratio increases over time, it shows that relative strength of the stock and hence profitable investment opportunity. What it means is, to summarize it, that if a stock, particular stock rises greater than the rise in the other stocks from the industry or rises more than the increase in the index of the stock market, whether it is Nifty or whether it is Sensex. In case of the National Stock Exchange, we call it Nifty because the index of the National Stock Exchange is Nifty and the index of the BSE is called the Sensex. So if the increase in the share price over a period of time, say if I take monthly data in a month, in a last 1 month, is greater than the increase in the index, the stock index or I would simply say the index of the stock market, right? So it means it is a sign that there is a relative strength in the market and it is a sign of bullishness. People should buy the share so that they will increase further. So this is called relative. This is one of the indicator by which the chartist, the technical analyst analyze whether the share is in the bull market or means it will increase further or it will decrease. And reverse will be the case if the share falls greater than the fall in the stock index. I will say the share is in the weakness mode. The other is called volume indicators. Means in the volume indicators, what is the quantity of the shares, what is the volume of a particular share that is being dealt in the market, in the stock market on a particular day or in a time period. On the basis of that, we analyze whether the share price will go up or whether the share price will come down, right? Means by seeing the volume of the particular share, when I am saying seeing the volume is that what is the volume of sale and purchase on a particular day or in a particular period of that share. On the base of that, we analyze what will be the we predict what will be the price behavior of the share. So stock's past volume data provides useful insights into the short-term price movement and hence can be used in predicting stock prices. The technical analysis or technicians, observed that rising volume in the bullish market is a further bullish sign. If you recollect in my previous lecture when I was talking of Dow theory, I talked about bull market and the bear market. Bull market means the bullish market. Bull market is a market where the stock prices increases for a fairly long period of time. And bear market is a market which is reverse of the bull market where the stock price falls in a for a fairly long period of time. So if in a market is bullish mode, there is a bull market, and in the bull market, if the volume of a particular company's share is large, is high, it means there is a further bullishness. Say for example, the daily volume turnover, the daily turnover or daily volume of a particular share, say company X. So in case of company X, the past 1 year average is that 5 lakh shares are being purchased, is being bought and sold in a particular day, and the market is bullish. Now 6 lakh, 7 lakh shares are being bought and sold on a particular day. It's a sign of further bullishness in the market. Means the share price will go up further, because in a bull market is in a bull market. In the bull market, the turnover increases, the volume increases. It shows that there is a more interest of the public to buy this share. So this is a sign of bullishness. Declining volume in a bullish market, supposing market is still in a bull market, means the share prices are going up, the index is going up, the Sensex is going up, right? But the volume of a particular company's share is less as compared to its past average. So it's a sign that it is a bear phase. That is the price, there is a likelihood that the prices which are increasing, because in the bull market by and large the share price goes up, but if the volume declines, it's a sign that in near future it can come into declining phase. That is, market is bulling, the whole market is going up, the index is going up, but of a particular company share, right, the volume of that company falls. It's a sign that in near future the share price will fall further, because otherwise market is going up, people are buying more and more shares, but of a particular company, as I was saying, the average turnover or average purchase and sales of a particular share is say 5 lakh share, but you observe that only 2 lakh share, 3 lakh shares are being dealt in a particular day. It means volume has fallen from the previous average. If it has fallen from the previous average and the whole market is going up, it's a sign that the share price will be in bearish phase in the near future. Reverse is the case in the bear market. Rising volume in the bear market or bearish market further strengthen the bearish trend. Let me continue with my same example. Average turnover, average volume purchase and sale is 5 lakh, right? There is a bear market. Bear market is a market where the prices are falling. The Sensex or the Nifty is falling. So in a bear market, the volume increases. Market is falling, and with the fall in the market, the share price, average share price volume is falling further. That is, instead of 5 lakh, 6 lakh, 7 lakh shares are being sold daily. So it means there will be further bearishness in the particular share, right? So in a bearish market, if the volume increases, it's a sign of further weaknesses in the share. And reverse is the case in the bearish market. If the volume decreases, it means the more and more people are not interested in selling that share, right? So in near future, there is a likelihood that the price will not fall further and the price will start rising, right? So, there are two markets we have taken, the bull market and the bearish market. In the bull market, if the volume increases in the bull market, when I'm saying volume increases means volume increases more than the average turnover of a particular company share, right, in a time period. So it's a sign of further bullishness. If in a bullish market the volume decreases, there is a likelihood the share price will not go up at the same ratio at which it was increasing, and in near future it may fall. Reverse happens in bearish market. Bearish market is a market where market falls, Sensex falls, Nifty falls, right? Prices in general of the shares are falling. So if of a particular company, the volume of a particular company increases in a bearish market, it means there will be further decline, and the rate of decline will be faster in the particular share, right? And reverse, if in the bearish market the volume decreases, it means now the people have stopped selling this company share and less people are ready to sell this share. So it's a sign that the bottom has reached and it will start increasing in near future. So this is about the volume indicator. So it means in nutshell, by seeing the volume in which volume is the turnover of a particular company shares, right? Or if I talk of the whole of the market, the turnover in the stock market as a whole, right? By judging the volume means the number of shares traded on a particular day, or if I talk of the Sensex, the total turnover in terms of rupees or in terms of the number of shares. You judge that whether the volume is going up or whether the volume is falling. After talking of indicators, let me talk of charts now. There are certain charts, I may not be discussing all the charts, but some of the important charts I will be talking of. What is the charts? Charts are the basic tool for performing technical analysis, means it's a tool of technical analysis. It provides a visual assistance to the technical analyst in detecting and evolving and changing patterns of price behavior. What it means is, just by having a glance over a graph, over a chart, you can know what are the patterns that are evolving, what are the changing pattern in the price behavior that are evolving. So the benefit is that it has a visual impact. Just by seeing the chart, you can make out in which direction the share price will go up. Technical analysis will try to make out that in which direction the share price will go up. So charts are useful both in analysis of individual securities as well as market movement analysis. Normally in the charts, I'm generalizing it, 4 prices are shown in charts. It is depending on chart to chart, but I'm analyzing on the basis of opening price of a particular share, or if I talk of the whole of the index, opening index, right? The closing price, that is at what price the particular company shares closes. When I'm saying particular company, means the chart of which we are making, means the company which we are showing to predict the share price of a particular company. We make the chart of that particular company on the basis of its opening price, its closing price, the high price in a particular day and the low price in a particular day. If I'm making a daily chart, if I'm making a monthly chart, I'll say in a month that in the beginning of the month what was the opening price, in the end of the month what was the closing price, and what is the highest price during the month and what is the lowest price during the month. So on the basis of these we make different charts. Now let me talk of different type of charts. One of the important chart which the chartist and the technical analyst see is double top. As you can see here, what is double top? We start on the x-axis, we are showing the time, and on the y-axis we are showing the price. In all the charts and in all in these types of charts, x-axis the time is being shown, and on the y-axis the prices are being shown. If I make a daily chart, right? So means the daily prices, and I'm taking only the closing prices. The closing prices of the shares of a particular share, if I'm talking of a particular company, say company A, the closing price of company A is being plotted on a graph, and these dots are being joined, and on the base of these joined dots, right, we make out a different lines. And what you're observing here is that share price starts falling a little bit, then it starts increasing. It reaches a particular level, that is the first peak, and then after reaching that level it starts declining. Up to a particular level it declines and then again starts rising. And when it starts rising, the second top is almost equivalent to the first top. Not exactly, but it's almost equivalent to the second top. right? The first top. And then once it reaches the second top, right, it starts falling further. So this price behavior pattern, or this is called so double top. What does the double top signifies? What it means? When in a particular company's share price, double top is being made, it means it's a sign that after reaching the second top, there is a resistance that the share price will not go up further. Normally, the shape of the double top is M shape. You can visualize. You can see here that there is a M shape that is in making by when you join the different closing price of the shares. And what we have done is we have made a neckline. What is this neckline? The two bottoms that are being formed, right? So on the base of these bottom, I have drawn neckline. So from the neckline, share price goes up, right? It reaches a particular level and then again starts falling. So double top is two tops that you are making. So that is called basically double top. When the prices reaches at the second top, it means at that point there is a resistance in the share. What do you mean by resistance? Resistance means that there is a likelihood that the price will come down, right? So it is an indicator that now it is a time to sell the share. So technical analysis on the base of, if I predict on the base of price behavior on the base of technical analysis, the moment the share price goes up at the double top, it's an indicator that in near future the price will come down. So two bottom shows the support level for the stock and hence provide a buy opportunity at the bottom. If it is at the bottom, I'll be talking of the double bottom also. So if I talk of the double top, so the two top shows the resistance level and an opportunity to sell. Means, as I'm saying, the double top is being formed and on the base of the second top, it's a sign that price will fall. And if it is a double bottom, you can see here double bottom. In the double bottom, let me talk of this first, this double bottom here only. When the double bottom is formed at the neckline, it is a double bottom, right? So the two, when we join the neckline, on the base of neckline, you can see that what will be the price behavior in the future, right? So this is double top and double bottom. Now coming to this, the double bottom reversal. Now I am talking of this is double bottom is basically W shape. Double top is M shape. W bottom is W shape, right? So what you can notice here is that the double bottom reversal is a bullish reversal pattern typically found on bar charts, line charts and candlestick charts. These are the different charts, right, which we can draw. Here we have drawn we have again shown the closing prices of a particular company's share, right? On the x-axis the time, on the y-axis the price, and on the basis of these points, on the base of last closing prices, the shape that is coming is W shape. So once the double bottom is formed, it means it's a sign that the price reversal will take place. The price will go up. The second bottom you can see, right, on the right hand side, as the bottom is formed, the second bottom is formed, then share price starts rising. So once the double bottom is formed, it's a sign that it's a bullish sign that the price will go up in the near future. So this is on the base of double top and double bottom. Once the top is being reached, double top is reached, it's a sign that there will be resistance and the price will fall. If there is a double bottom, means after the second bottom, it is a sign that the price will go up. Now there is another indicator which is called higher top, higher bottom. It is featured by a series of higher heights and higher lows. If you observe this, what you find is again on the x-axis, the time is shown, the y-axis, the prices are being shown. Starting from the left-hand side, the share price starts rising. It rises up to a particular level, then starts falling. Please observe this chart and graph properly. Once it starts falling, it has not breached the previous lows, then again rising, and it goes up, it increases and breached the previous high, right? Supposing the share price starts moving from say 300 rupees. From 300 rupees, it reached to 340. From 340, it starts declined up to 330. Means it has not breached the previous low, that is 300. From 330, it again starts increasing and it goes up to 370, right? So 370 again it started declining, but it has not declined below 330, the previous high, previous low, right? So it has declined only up to 340. From 340 again it starts rising. It goes up to 390. Means the previous high was 370. Now the new high is 390. From 390 it start declining, and it is not declining below the previous decline. So this is called higher top, higher bottom. When there is a situation of higher top and higher bottom, means at each of the cycle, at each of the stage, the share price is going further and further, right? Is going higher and higher. So it's a sign of bullishness in the market. It's a sign that when I talk of the stock particular, it is a sign of bullishness. So higher top and higher bottom is a very widely being used chart that is being prevalent, widely being used by the technicians, by the technical analysts to judge that whether the price of a share is in the booming phase or in the bearish phase. Whenever the higher top and higher bottoms are being formed, it means it's a sign that the stock market, the prices will go up, right? Higher top, higher bottom. And in the last, you can observe, in the last, so once the top is being reached in the last cycle, it has not breached the previous high. It is less than the previous high. In the last phase, extreme right? So that is a sell signal. Means the higher top and higher bottoms have reached, and it is a sell signal. Now from henceforth, the price will fall. So it shows a continuous formation of higher top and higher bottom. Such a stock is an upward. So it is advisable to opt a buy on dip strategy. That is, buy on dip strategy means when higher top and higher bottom are being formed, whenever the share price falls, it's a signal that one should buy. Because if you buy at the dip time when the prices are falling, there is a likelihood that when the share price will start rising, it will breach, it will break the previous high, and the price will go up, right? So it is advisable to opt a buy on dip strategy because there is a optimism that the stock may rise further, right? So these are the various charts which we normally use. The reverse is the case, lower top and lower bottom. See, in the bull market, higher top and higher bottom are being formed. In the bear market, lower top and lower bottoms are being formed. It is just reverse of the previous chart which you have seen, right? Lower top and lower bottom. What is happening here? It is featured by a series of lower highs and lower lows. What is happening? The stock price starts falling, right? It reached up to say this is for L1. From L1 stage, it starts rising, right? If I call it, say, for example, H1. So H1 stage, it is not breaching the previous high where from we started, where from the stock price starts declining. Once it reaches H1, again it starts declining. And when it declines larger than the L1. Means earlier it stopped at L1 and start rising. Now what is happening when it starts falling? It has broke the L1 level and it has fallen further. Similarly, in the third cycle, it rises, but it rises not more than H1. It rises less than that, right? H2 is less than H1, and so on, so forth. So it's a sign of bearish market that every time the lower top and lower bottom are being formed. Whenever the highs are being reached, it's a sign, it's a time to sell the shares because the market is in the lower top and lower bottom. Every time, in every phase, in every cycle, say if I take 15 days a cycle on an average, right? So within the 15 days, it increases and then it starts declining. For 15-20 days, starts declining, but decline larger than the previous increase, right? Or previous decline, sorry, right? And it further increases, but when it increases less than the previous increase, right? So this is called lower top and lower bottom. So it is featured by a series of lower highs and lower lows. The stock consequently reaches a high which lower than the previous high as soon as possible, right? Yeah, it always lower than the previous highs, right? Whereas it touches a low price which is further below the previous low. So lower top, lower bottom is a sign of bearishness in the market. It shows continuous formation of lower top and lower bottom. The stock is downtrend, it is advisable to adopt a sell or bounce strategy. Means whenever the share price increases, it's a time to sell the share, right? So it is advisable to adopt a sell and bounce strategy, as pessimism will take the stock further lower. So with friends, so this is about, in this lecture we'll continue with this, that the different charts and the patterns I'll be continuing in my next lecture on the technical analysis. Thank you.